Hey, my name's James Wilkinson and welcome to my YouTube channel. In this video, I want to talk about brokers. Not just one broker, a ton of brokers are saying they feel that mortgage interest rates, the rate that you get rather than the Bank of England rate, will be under 3% by the end of 2024. Now, this is very interesting. I'm going to give you my opinion as well at the end of this video, whether I think this is true or not. So make sure you watch this video to the end. While you're here, if you haven't done already, make sure you do subscribe to the channel and hit the bell notification. Have a look around this video somewhere. You'll see how close we are to getting 19,000 subscribers. Maybe that subscription from you will get us over that limit. Also, while you're here, as always, if you haven't done already, smash the like button or tickle the like button. Do something to the like button over there, guys. That really helps us with the YouTube algorithm. It gets more viewers, it gets more subscribers. We did 2 million views last year. Our goal collectively this year is 5 million. So can we hit that? Only if you do that. So what is going on? Well, look, interest rates have been a topic of interest for you guys. They're actually some of the most watched videos on this channel where we talk about new lenders. We've had some deals this week, haven't we, where we had the big four have started to get sub 4% deals now, which is really good. And inflation was going crazy this time last year. I think this time last year we were around about 11%. And we've brought that down. And that was officially at 3.9%. I look on a site called Trueflation every day. Some of you guys have started to look at this site too. They're saying right now, today, the UK inflation is 2.95%. So it'll be interesting to see next week what data we actually get. Are we under that magical 3%? That gives us 2 point something, right? That would be very, very good. Now, I've also seen some analysts saying that, a lot of economists are saying that by summer, the UK, the inflation could tumble to 1.5%. And one thing we've got to consider is energy costs. They haven't been impacted too much recently. There's some stuff going on in the Red Sea. There's terrorists making it hard to get goods through. So people had the perception that that would drive up energy costs and fuel costs and the products that you buy. But one thing you should look at when you're looking at inflation is China is kind of in deflation at the moment. They've got loads of goods that they're sitting on and they're expected to flood us with cheap goods. That will bring potentially our inflation right down and maybe even get us to a period of deflation, which is actually not what you want. Obviously, it sounds good, doesn't it? You want to get your goods cheaper, but if you go into deflation, companies will be losing money or making far less profits. They'll slash jobs significantly in that scenario. So the inflation is moving down, and that's where the Bank of England has to look at it. There was an interview yesterday with Andrew Bailey, and while he didn't say interest rates are going to drop, he did mention that the lenders, the mortgage rates are dropping, and he felt that they could still improve further, which was very, very interesting to see. He felt that inflation has actually dropped significantly recently because of energy costs and stuff like that. So he's not going to come out and say, look, guys, I'm going to drop the interest rates. They're never going to do that, because if they do say that, then the problem that you've got is we all pause everything. I've got 2 remortgages going through today, or go through the process. They're not completing today. They'll go through in the next 4 or 5 weeks. If I know that interest rates guaranteed are going to be down in March, I'll wait because I want to get a cheaper deal. So brokers are looking at this and they're looking at swap rates. And swap rates is the rate that the bank borrow the money at. It is kind of helped along by the Bank of England base rate, but lots of other factors come into that as well. And the swap rate is near 3% now. So there's some room for some more movement down. And Montgomery Financial, a guy called Charles Breen, who's the founder of that mortgage brokerage, he feels that interest rates will be sub 3% at some point this year. Now, if that happens, that's pretty much close to where we were at before the interest rates went up anyway. Now, I know the Bank of England rate was 0.1%, but the amount that you borrowed at wasn't, right? There was some margin put on. a couple of percent put on top of that anyway. So people were paying on average 3% anyway. So we're getting very close to being to that level. And that means that the 1.6 million people that come off their fixed deal this year could not, potentially be not hit as hard as they were thinking they might be. And so these guys are saying that this is based off the Bank of England dropping rates by the summer. There's lots of other companies. There's one called Stanton Mortgages as well. They feel that mortgage rates will drop between 2% to 3%. Now they're saying that it'll be high too. So we're talking like 2.6, 2.7, 2.8, 2.9. That's the sort of level that they feel interest rates could get to this month. Now, some of you are going to say in the comments, well, brokers are incentivized to talk the market up. Yes, they are. Of course, they want to get business, but I don't feel that if they feel that this is something coming in the massive far off distant future, this is good for them to necessarily say, because if the rates that they can offer you today are 5%, but they're saying they're going to drop to 2%, you're going to delay your purchase, you're going to delay your refinance. So I think they'd have to be fairly confident from speaking to lenders, from knowing what's going on in the market, to really feel that this is something that could happen. So what's my thoughts on this? Where do I feel rates are going to get? I'm not as optimistic as these guys. I think you're going to get some bumps in the road, and I don't think rates, even if the Bank of England starts slashing the interest rate, I don't think lenders are going to pass all of that back on. If the Bank of England drop their rate by 2%, I think you will get a drop, and I think the best you can hope for with a rate that you get, excluding the Bank of England rate, that you actually get yourself, I think, this is my prediction, I think the best rate this year will be 3.5%. And I think that will be a rate along that lines. And I think the fees on those kind of deals will be £999. That's where I feel they'll be, rather than percentages. And I feel that this will be similar rates on buy-to-let and residential mortgages. I think that that's where they'll both get close towards. All the lenders, they're struggling for business, they're fighting for it, but they also need to make profit. That's important to their shareholders. So I don't think they're going to start slashing to 2.5% or anything crazy like that. If you can get that kind of rate, maybe you were on a 1.5%, so it is going to be a little painful, but that's much, much better than we were expecting this time last year. Let me know, what do you think of all this talk of sub 3% rates? Comment below. Do you think that's possible? Do you think it's likely? Do let me know in the comments. Do smash the like button if you didn't earlier. And if you didn't join our Fundamentals of Property Investing program, more than 100 people have joined this week so far. Thank you to everyone that's done that. That is on sale until Sunday at midnight. It's just £29, guys. There's nearly 100 videos in there. We've had great feedback already from people that are going through the program. It's crazy cheap. Everyone else charges £3,000, £10,000 for this kind of stuff. It took me 6 months to make it, so I'm going to put a link below where you can go and grab the Fundamentals of Property Investing for just £29 before that price goes up next week. Do check out some other content while you're here. Why don't you go and watch this video right here?